5 steps how to become a good investor. Today we have with us Jan Swazzo, which is the co-founder of Home Heritage Capital, an investor. So Jan, tell us what are the 5 steps to become a great investor in the first place?
Welcome to Entrepreneurs Are Leaders podcast with Harry Sardinas. Interviews with world's most influential entrepreneurs that share tips about how to grow your business exponentially. Charismatic speaking, leadership, branding, marketing strategies designed to help you monetize your knowledge, find true happiness, and manifest your goals and dreams.
So I'm gonna do 5 steps, but I'll try to put them in the most important to less important for me. So I'm a stock investor myself. I believe that the time we are in society, it's very, very important. I believe that technology doesn't move in a linear scale, but rather it moves exponentially. So every time it gets steeper and steeper. And I think we are in the part of that curve where it becomes more vertical than ever. So with artificial intelligence, my opinion is that we didn't invent it. We discovered artificial intelligence, but by putting massive amounts of data together. And I believe we are in an inflection point. So my first advice would be know what you invest in and know the sector, because for the last years, we would be performing pretty bad if your investments would have been in healthcare or something like that, rather than in technology. And in the last 10 years, practically no investment has beaten inflation aside of the Nasdaq and Bitcoin. So you not only need an investment that outperforms inflation, but you need a little bit more than that, because the real inflation is higher than the numbers that go out by the Fed. So with that into consideration, that's the first step. It's know what you invest in and know that it's a hot market, basically. Then after that, do your due diligence. You need to know the risks of that investment. But it's one important thing that it's really, really important that I learned over the last few years was that every investment has a risk, and there's no doubt about that. But the trick here is to know if that risk is already priced in the price. So for example, a company right now, Nebius, it's an AI data center stock. And what they do is they buy GPUs from NVIDIA, they put them in a massive warehouse, and they rent that compute to hyperscalers. So for them, for example, the risk is deployment of those massive warehouses, because there's risk of the community of the city being opposed, or they are using too much water or too much electricity. So that's a risk. But then you have to look into the price and the valuation to see if that price, because every investment, it's at a discount because of something. It's at a discount because the risk, investors are pricing that risk in the price already. So if you see the long-term success and your thesis and conviction is good, you don't have to mind about every necessary risk, but rather know if that's in the price or not. And that takes me to another one, that it's what I just said: conviction and thesis. Once you make an investment, you need to have a thesis on that investment, and you have to write it down. Why? Because when some time passes, maybe months, year, maybe you kind of forget what your thesis was at the beginning of that investment and your level of conviction, and you can trick yourself emotionally by selling or by buying more when your original thesis was completely different. So for me, when I exit an investment, it's not because it's going down, or it's because it's just because the thesis is being broken. I mean, if the thesis is broken, is when I take profits or when I exit the position. And then the conviction. You need to have conviction on your thesis, because if not, you're going to get emotional, and when you get emotional, you're not going to make good decisions. You're going to make decisions based on fear or in greed. When it's going up a lot, you're going to buy more or not. So the other one is position sizing. Position sizing is probably one of the biggest skills to develop, and there's one very famous trader that said, it doesn't matter if you're right or wrong, it matters how much you win when you're right and how much you lose when you're wrong. You can have the best thesis with the best conviction possible, but if you are not positioned accordingly, you're not going to be able to benefit from it, because maybe you had a lot of conviction, but you went too soft with the investment that it ended up doing 100% return, but your investment was so little of your total portfolio that you didn't even notice that, you know? So position sizing matters in investment. It's probably the one thing that differentiates the successful investors with the ones that are not. And then for my last advice would be bucketing. I think that I call bucketing. So you need different types of buckets in your portfolio. This is more of what the person likes and the risk that they are able to tolerate. But everyone needs a bucket that is I don't know if I can curse, but the fuck off bucket, basically, which basically means that I can lose that money. Okay, it's investment in the stock market where you have to go hard with your thesis and your conviction, and you can be more open to put that money at risk. So it's really important to have that bucket, and not many young people have it. They think that they have to compound capital over time, and that's true. That's why you need a bucket that it's for compounding capital, but you need the get rich quick bucket. I mean, you need it especially now because we've seen, for example, a company called SanDisk, which is a memory company for the data centers. It went up in 2025 4,000%. So a $25,000 investment would be 1.2 million as of today. So there's important opportunities like that in the market right now, and that's what we have to take into consideration. One last advice, if I may say, is that don't listen to everything that the media of the people say. I think we all know this, but have your own thesis and your own conviction, because there's a lot of fear right now in the market. Are we in an AI bubble? Are we not? People are comparing this with 2002, but things for me are really, really different. So if you act from the fear of what the media or your social influencer says, you're not going to be able never to make money, because you're never going to be able to make your own thesis and your own convictions. So that's probably the most important one. It's your trust on your conviction and on your research, and just go hard when you think you're right.
So, Jan, where do you learn all this? What's the story? Tell us the story.
So I remember being in university in Spain. I did half of college in Spain, half in the US. And in Spain, the teaching system was, for me, very, very bad, because I'm a person that learns by acting, not by studying. And the Spanish system is study, 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 and you're going to get a test at the end, and you're going to be graded on that. And many people think of themselves, their identity, they reflect themselves on that grade. So that's why many people who are great never succeed, because they get reflected and their teachers tell them that they are bad because of their grades. So at that point, I decided to go to the US and escape that. I knew I wanted a degree, but I knew I didn't want to suffer 2 years more. So I went to the US, and everything changed for me because it was much more hands-on. I started learning much more in the business side, in the real business side, about money, about investments, about so on, rather than just pure theory of 50 years ago that doesn't even matter today, you know? So I started learning about investing, and I became literally a freak on the stock market. And I started learning, reading books. And for the last 3 years, I have a compounding return of 50% year over year. So I like this because I can see my results like in data. You know, I can see how much I performed this year, how much I performed last year. And then at the last year of college, while I was doing all the investment stuff, I started a company with my co-founder that is called Home Inheritance. And that's the other part of society that no one is looking at. It's AI, but then it's also the silver economy, a part of the economy where it's so big that it's probably going to be one of the greatest wealth transfers in society, and it affects directly real estate. So trillions, almost 11 trillion of US dollars are held by seniors in America, and that needs to get passed to the new generations. And at the same time, these seniors are getting are liquidity poor, so they don't have cash, but their homes that they bought for 100,000 now they are worth maybe even here in Coral Gables 2 million. Okay, so seniors need a way to access that liquidity, but they don't have it. They just have bank options, which right now for properties over 1.2 million, that the rates are going for 9 to 12% interest annually. So if you want to leave, you're a senior and you want to leave something for your heirs, with the bank solution, it's impossible. You're going to lose everything and probably have debt for your children that they're going to inherit debt instead of money. So we came with something better, something that it's non-debt, no payments. It's just a simple sale of your inheritance, of your future home inheritance at today's value. And so you can leave your retirement, pay for medical expenses that normally you couldn't, maybe in-home care assistance and all these things. So as Larry Fink, the CEO of BlackRock, said, retirement is one of the greatest problems in the US right now because pensions are not enough. And I really wanted to tackle this problem because I don't only want to be an investor in other companies, I want to build value myself. So that's why I started Home Inherit Capital, and that's why we're in. And it's develop your own business, not only invest in others.
So there is a difference. There is a difference between making money, okay, which is being an entrepreneur, and keeping the money, which is become a good investor. So you are being an entrepreneur when you are doing this investment, so you're making money, okay? But the interesting thing is becoming a good investor parallel when you are creating all those buckets. So you, after you make some income, you are diversifying the risk, which is a very great structure to keep the money, okay? So what message do you have for entrepreneurs listening to the podcast? Because they are very good at this side, which is finding the product, sell it, making profit, and make money. But the second part, which is keeping the money, where you have to become a great investor, this is a different skill, totally different skill sets, and nothing to do to be a good entrepreneur. You could be a very good entrepreneur, very bad investor, because you can be very good at making the money. But the examples are people that win the lottery, or people that a lot of high talent sports people that they make a lot of money. Sorry.
Bless you.
But some of them struggle to keep it and they have to file in bankruptcy, which is something that to you, it might not make sense, but it's very common out there. So
yeah.
What message do you have for entrepreneurs in the area of keeping the money and protecting the wealth? And when do you realize that there are two things that you need to master? One, like for example, you have your own company, you're co-founder of your own company, you want to make money with that company, okay? But parallel to that, you are developing several verticals, the areas of building wealth and keep it up that you make.
So first of all, you need assets. You need to buy assets, especially right now. There's no doubt in that. I mean, if you keep cash, it's going to depreciate. Since 2021, your cash, if you had your savings in cash, probably depreciated in 1/10 of what you had suddenly in a couple of years because they printed so much money after COVID. During COVID. So, okay, once we know we need assets, what type of assets do exist? It's real estate, stocks, bonds, and then cryptocurrencies. So then you need to organize yourself with your money and say, okay, I'm going to start bucketing. I'm going to start my long-term capital bucket. I'm going to inject X amount of capital each month in this bucket. And then you want a get rich your greatest companion in your wealth management, in your personal wealth management. It's even better than probably a 100K a year person. I mean, I really believe that because I'm using it. I've built systems with AI and wealth management. Right now, one interesting thing is that data is commoditized. So you can do with AI all types of data analysis, PEG ratios, any kind of stock analysis. You can do it in AI. So that's why it has become so commoditized, and it's not an edge anymore. It has been for hedge funds before, but now everyone has access to calculating those ratios and so on. So your edge is in your thesis and in your conviction. It's not in the numbers. Do I really believe that this company is going to grow? So in that get rich quick bucket, you need to research as you do with your own business, to do it in other businesses, so you can take a share of all the development that is being done in the AI world. Anthropic, for example, had 100 million revenue in 2025, in the middle of 2025. Now they have 30 billion revenue quarterly. So you need a share of that. You need to, maybe it's not in Anthropic because it's private, but what does Anthropic need? Anthropic needs GPUs, Anthropic needs photonics for the GPUs to connect, it needs memory, it needs some bottlenecks for that to develop. So just research into these things and put your money in assets. Real estate, I'm not a big fan of the typical real estate, not our real estate, because typical real estate comes with operational management. It comes with having to pay for, if the house is not rented, you have to pay for the insurance, you have to pay for maintenance, and then you rent the house, and the renter calls you every couple of days, hey, I need this fixed, and so on. So I don't want that in my life. I don't want someone calling me that they need a fridge repaired, you know. So I need assets that are light, not that are time constrained for me. Home Inherit, our company, is very good because for investors, you don't need to deal with anything. You just have the right of inherit the part of your home that you bought at that time. So I don't have to deal with any kind of person or payments or nothing. The senior keeps paying everything because she's keeping the life estate. So if I would invest in real estate, it would be the way that we at Home Inherit Capital are doing it, because it's just better. I mean, with Home Inherit Capital, you get more cash than renting. If you put the total amount of time in renting compared to our program, you get more money by our program, and you don't have to deal with anything. So that's first. Time for me is the most important thing. So I wouldn't touch real estate right now if it wasn't Home Inherit, and then stocks, and then I would buy Ethereum. I mean, I have done probably more than 200 hours or more, 1,000 hours of research into Ethereum. I've worked with them, with the Ethereum Foundation. I've worked with Coinbase. I've worked with this company. I've seen it from the inside. You're going to see so many opinions on that asset. But for me, it's an asset that I want to hold 10, 20, 30 years, even more time than these companies. Ethereum is something that I want to buy. But you have to do your own research into that and then have conviction. So be Ethereum, stocks, and then real estate if it doesn't take you too much time. But you need assets.
Yeah, and picking those assets is what is required expertise, and then but your return that you check with us quite impressive, right? 50% every year, right? This is a great spectacular numbers, right? And requires a lot of studying, a lot of due diligence, and a lot of
you know what to get to get these returns, like what it takes most is challenging the opinion of others. So when you to get these returns, when you are gonna buy that asset, it's not probably gonna be loved by other investors. Probably other investors are gonna hate on it. Probably I'm gonna tell you that it's not a good time. What are you doing? But that's when the opportunity lies in that asset. It's not when everyone rushes in to buy. So I can tell you how I did it. I did it, for example, I'm an early investor in Rocket Labs. Rocket Labs is the second biggest company of rockets behind the SpaceX. So SpaceX announced that we're going to IPO this year. So I started Rocket Labs and I said, I want to deploy capital here. Today, it marked my second biggest position, over a 200% return in less than 2 years. I also recommended my parents to buy Rocket Labs at $50 a share. It's at 120 now, so my parents are happy as well, and I love other people when other people win money as well. Then, for example, Bloom Energy, we know that we are capital like power constrained in the world. We know that power is not enough, like the grid cannot keep up, and to build new grids is taking 3 to 5 years. So this company came and said, I can put power in your data center in 55 days if we don't use water and we don't pollute. I'll buy it. I'll buy that asset. So at the beginning, no one, like everyone was looking at the ratios, the numbers, it didn't fit. But like you cannot look into an investment what is it now. You have to look of what it can be in 1 year, 2 years, depends on your time frame.
Jan, if somebody wants to know more about you, how people can find you, how this process work?
So if you want to see research, what I do some research every once in a while on LinkedIn. And then if you want to follow my hard investment convictions or thesis, follow me on Twitter, on X, Jan Zuazo. That's where I post, and you can see the dates of the posts and see the prices of the stocks. So you can see it for yourself in Twitter.
And you can see the people challenging your opinions or not, right?
It already happened, and that's how I gained like followers, because people said, okay, this guy went against everyone and he was right. I mean, that's a good thing about X and Twitter is becoming a financial opinion platform. So you can post, there's a thing called cash ticker. So you, instead of putting a hashtag, it's a cash tag. So you put a symbol of the dollar and then the name of the company, and you can research all the posts about that company. So when people say, okay, who posted about Bloom Energy? Oh, Jan did a couple of months ago. So you can, like, there's a lot of discussions, a lot of good questions, a lot of good arguments in Twitter, definitely.
So Jan, thank you so much for being in the podcast. I really appreciate it. And for all of you following the podcast, entrepreneurs, leaders, see you in our next episode. For now.
Bye.
Follow us for more on charismatic speaking, leadership, exponential business growth, branding, marketing, strategies designed to help you monetize your knowledge, find true happiness, and manifest your goals and dreams.